one of the things you're doing is building data centers, for example, and having to invest heavily in that space. Obviously, there's component parts that are coming in from China and all over the world, and how you think about that, for example.
Well, every finished good that's got any degree of complexity in it has parts from all over the world. And that's been true for a while. And actually, in our AWS business, really starting about 5 years ago, we very significantly diversified our supply chain. And so we have components that are from everywhere. It's not just one country. But we have such high demand right now for AWS, and the AI growth is so significant that we don't see any attenuation in demand, and we're going to keep building.
And so there would be no, depending on what happens with the tariffs, there'd be no change to that view.
I don't see us attenuating our building data centers right now. We have very high demand.
Can I ask one related question on terms of data centers? One of the other sort of major shocks to the system was now a couple months ago was the creation of DeepSeek, which was this new large language model that people thought was remarkably more efficient. And there was this view among some that said, maybe we don't need all of these data centers, or we're not going to need all of this processing, as much processing power and as much energy as some had forecast. Did it change your forecast at all when you saw that?
No. I mean, in some ways, we would like nothing better than to make the cost of AI meaningfully less expensive for customers. And the cost of AI today, because of the chips and because of the cost of inference still, even though those have, the cost of inference has come down several times, but it's still more expensive than it should be and than it will be. And then what you need for companies to be able to deploy AI as expansively as they want. And so when DeepSeek came out with this model, which people were excited about, it felt like it cost less, it felt like the inference was less. I think if you're building frontier models like we are as well, you're all working on a lot of the same types of problems, and you're going to see all this leapfrogging. You have seen all this leapfrogging every month, and you'll continue to see that. But for me, the lower that we can make the cost of AI, the more customers are going to use it. And I think people get confused. I saw this in the beginning of AWS too, which is customers love when you take the cost per unit of something down. It allows them to save money on what they're building, but they don't actually spend less. It actually unleashes them to do a lot more innovation, and in absolute, they spend more. It's the same thing when we started AWS. We pretty significantly changed the cost of compute and storage and database. Customers loved it, but they actually spent more on infrastructure because it allowed them to build more for their customers.
So, but that's something you talk about a lot in the letter, bringing down the cost of compute when it comes to AI. And obviously, you also make an allusion. I don't think you use the word Nvidia, but I know there was maybe a frenemy, partner, and a competitor at the same time. They have controlled this marketplace for a very long time. What do you think has to happen to bring the price down? Because I assume that that's going to come from you and AMD and everybody else who's going to try to do this. But how quickly does that happen?
It is going to happen. I mean, first I would tell you that if you sat in the meetings with the AWS team right now, they feel like it's their responsibility and their mission to make the cost of AI meaningfully less for customers than it is today. And I think there are two big drivers of it. One is the chips. And, what's interesting is most of the spend today in AI has been on training, these giant training runs.
Right.
But when you get to scale of the production applications for AI, it flips. And the overwhelming majority of the spend is actually on the inference, which are the predictions from the model. And so the two things that have to happen is the price performance of chips has to be meaningfully less, and that's part of why we built our own chips. We have our own custom AI silicon called Trainium 2, where the price performance is 30 to 40% better than what's out there in the current GPU instances. So we're working on trying to take the cost of chips down, and you have to take the cost of inference down. And that has to do with a whole bunch of things, including techniques like distillation and prompt caching and how you handle different model architectures. So it's both the chips and the inference. They both need significant cost decreases, and we're working hard on that.
Breaking news. Trump's trade war escalation has sent shockwaves through the stock market. But there's one shining star that could emerge unscathed: Nvidia. Morgan Stanley has labeled Nvidia as their top pick, even amidst the chaos caused by the tariff threats on China. While mega-cap tech stocks face uncertainty due to potential chip tariffs, Nvidia seems poised to weather the storm. Welcome back, everyone, to Investocracy.
Nvidia met with the president, but no call. Yeah.
I'm just saying that shouldn't you, like the president, say, listen, it's time to buy microchip?
No, but Nvidia was up, what, 18% yesterday? Tesla was up 22% yesterday.
People were short.
They were short so much.
I mean, I was talking to someone the other night, and the guy says, you know what? I'm shorting everything you talk about. I said, what, like my wife's party on Friday? You're shorting the party? I mean, like, come on.
It's going to be a great
Everything you talk about, I'm shorting. That's what the guy said. Everything. I mean, I was talking about the Phillies.
All right, let's get back to this conversation we were having about. By the way, the conversation we used to love. I miss those days, don't you? Where we just talk endlessly about Nvidia and AI and the need for obviously more and more data centers and everything that goes in them and how quickly things will move forward on AI and the need for power and that being the gating issue. Don't we all look back so fondly on those days? So let's revisit them. Andy Jassy was our guest on Squawk Box earlier, and this is what he had to say in terms of demand for AI and what goes on in data centers.
We have such high demand right now for AWS, and the AI growth is so significant that we don't see any attenuation in demand, and we're going to keep building.
And so there would be no, depending on what happens with the tariffs, there'd be no change to that view.
I don't see us attenuating or building data centers right now. We have very high demand.
I like the use of the word attenuating. So
attenuating is business word. Do you remember that when AWS was selling, they were worried about attenuated commitment of their clients. Attenuated, I'm going to add that to the, along with ill-advised, along with suboptimal.
I think you should. I like the word. But what it means is, hey, we're going to build it. We're going to build it now. We're not stretching out deadlines. Right. We're going to work. And again, as we said, Alphabet's saying the same thing. And so, I don't know, Jim, does that mean at some point we're going to get back to the AI trade, or is that kind of over and done with?
I think we're very, very much going to come back to it because the video has not been included yet.
In the realm of the stock market, where chaos reigns supreme, a glimmer of hope emerges in the form of Nvidia. Despite the turbulent waters stirred by Trump's trade war, Nvidia stands tall as a beacon of resilience and strength. Now, let's inject a little humor into our stock market tale. They say investing in stocks is like playing a game of poker. You win some, you lose some, and sometimes you just have to bluff your way through. Well, Nvidia seems to have a royal flush up its sleeve, ready to trump any challenges that come its way. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Nvidia is high and it's high in Nvidia, dude.
You know, OpenAI's image generating app or bot or they added 100 million users at OpenAI. It's a private company.
And yet it's not even that good. They rejected half the stuff I sent them.
It was so expensive and it burned out so many chips so quickly, I think they want to stop it. I mean, what I understand is, 100 million users cost them 25 cents each image.
A quarter we'd be able to fix
each
that.
Image.
All the data center stocks are down. Okay, so David, I use ChatGPT, Grok, Claude, Gemini, and Perplexity. And Perplexity has leaped over Grok in terms of being able to do great things. But I tell Grok, listen, I want it in Jim Cramer mode, and they have been able to duplicate Cliff Mason, who's my nephew and my head writer, my only writer. So Grok is able to imitate you, but Perplexity is coming up with answers that are lightning speed. I mention all this because every one of these needs to spend more money with NVIDIA. Because, David, this is a winner-take-all, loser-take-none. We're not all going to just use every single one of these.
Well, that's a good question because, and you may say that's the case. Others disagree. In fact, I think Satya Nadella, and this is some time now in a podcast, said, no, given the scale of this, everybody's going to ultimately benefit and win, that there isn't going to be the winner-take-all.
Yeah, but I don't want one that doesn't update. We need, but if you get them.
And by the way, Jim, you keep talking about the consumer application, but really it's going to be the enterprise where the real money is conceivably made, isn't it?
I agree with that, but I'm testing these every single day, and right now Perplexity's got the edge on Grok, which had the edge on ChatGPT, which had the edge on Claude, which had the edge on Gemini.
And one will be moving ahead of the other in some way, another, but it's going to ultimately be all the different kinds of applications.
Like, I never sat here and I said, David, have you tried Bing? Bing, like White Christmas?
Peering into the numbers, the data paints a vivid picture of Nvidia's strength. With record revenue of $39.2 billion in the last quarter, a 78% year-over-year increase, Nvidia is not just riding the wave, it's making waves of its own. CEO Jensen Huang's declaration of insane demand for Blackwell, the latest chip offering, only adds to the hype surrounding Nvidia's future prospects. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Hey, David. I can only imagine what you're dealing with in terms of clients, given just every day kind of being whipsawed. But let's start off with the AI trade, if we can, something we've talked to you a lot about. We've had Jassy on our air talking about no slowdown in demand, so we're not attenuating the data center. Alphabet coming out, reconfirming sort of CapEx, even Microsoft. Are you a believer? Are those good signs? Did things get back to what we thought they were?
Well, there's good signs. Like, I liked what Jassy said today. Also attenuating, I love that word. But I don't think that they are slowing down at Amazon. I don't think they're slowing down at Google. That's good. Microsoft's a little more debatable.
Yes.
They're kind of, they are a little attenuating a little bit, maybe, potentially.
That's what we all kind of hear, at least, yes.
But it does seem like it's going to OpenAI and others. Oracle's picking up a lot of the slack. You see, what David... There's a chance server prices really soar here, and storage and gear. So actually, the big clouds actually might be cheaper. So you might want to bring some workloads into the big clouds, because on-prem gear could soar in price, and then they have a relative price advantage. So if I'm running a big cloud, I don't know if I slow down right now, because you could actually take more workloads.
So you think you're going to take more stuff off of on-premise, where a company is saying, all right, we got to move more stuff to the cloud because it's just going to be cheaper.
It's going to be cheaper. And heck, I mean, if you're a big bank here in New York City, you have no idea what's going on. So it's like, why not leverage the cloud? Maybe it's cheaper. Maybe they can scale up and down, and you focus on something else, because it's so uncertain right now.
As we draw the curtains on this riveting stock market saga, one thing is clear. Nvidia stands as a fortress in the face of uncertainty. The forecast for Nvidia echoes a symphony of growth and prosperity, with analysts predicting a continued upward trajectory for this tech powerhouse. But what do you think? Share your thoughts down below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.